Howdy, good morning. Want to give you some info, some investing stuff. I was thinking about a concept with investing, right? So like sometimes people want to invest and they want to grow their portfolio, right? They want to put $1 in something and have it grow to $1,000. But then other people sometimes they want to invest where they're creating cash flows for themselves, right? Where they want to put some dollars in, but they want to make some money on those dollars, right? So there's some investment strategies called covered calls. I'm not going to explain everything about the covered calls, but the basic thing of it is this. There are people every day, they look at the market and they make plays. They're called calls, right? They make money on calls and they create funds. And then they say, hey, if you put money into this fund to give us more money to make more calls, we're going to pay you a percentage of what we make when we profit on these calls, right? So the funds don't give a consistent amount in dividends every month, but they do give something every month in dividends, right? And so when you look historically at how long they've been around, what they've been doing, there's a couple I want to talk to you about. So I'm going to show you some quick information here right now. So one of them here, which I think right now is pretty much a steal of a deal to purchase, but I'll explain that in just a moment, okay? I'm going to show you on my computer because it takes too long to edit and do a bunch of other funny stuff. I got a couple minutes. Kids about to get up. They got stuff to do. I have things to do. So I'm going to show you this quick and then we're going to get going. First thing. All right. So if you look here, you got Global X NASDAQ Covered Call ETF, right? QYLD is a stock ticker. So I'm looking at the stock ticker, right? And here's what I want to point out to you. I'm not going to go into all the details, but here's what I want you to see. The current price of this is about 18, right? A year ago, the price of this was around $22 or so, right? 22.51. So right now, from a year ago, its cost point is less than what it was, right? Now, when we look at what this fund does, they pay dividends, right? They pay dividends every month. So I went to Yahoo Finance, right? Looked at historical information back to see their dividends back to like 2013, right? So here we go. We got dividends going back December 2013 to July 2022. And then we scroll back every month, you see they're paying a dividend. 25 cents, 19 cents, 19 cents, 26 cents. You see it keeps going up, right? So they're all around the teens and the 20s. Every month that you own a share of this fund, you get paid this dividend, right? So this is just passive income that you're getting just from owning the stock. Now, some months they pay more, pay less. We have some months they're around, let's see, in 2017, I have one highlighted, they're around 10 cents, then 12 cents, 22 cents, 24 cents. So it varies. I think the highest one I saw was up here somewhere around 49 cents. That was December 2021. They had a really good month. They paid you 49 cents per dividend, right? So think of it this way. If you owned 1,000 of these shares, then this decimal point moves over 3 places, right? So 1, 2, 3. So if I own 1,000 shares, I'd be earning $181 on this month, $174 on this month, $179 on this month. Well, there's a term in investing called the dividend yield, right? So to calculate the dividend yield, you take the price of a stock and you divide it by, you divide the amount in dollars that you receive in dividends for 1 year divided by the current price of the stock. That tells you the dividend yield, right? So if you pay $100 for a stock and in a year you earned $10 from owning that stock, you divide the 10 by 100, your dividend yield is 10%. All right, so that's how you calculate the dividend yield. What I want to look at is this, okay? I'm going to show you on the screen here in just a second. So we have the total for the last year of this stock. I added everything up for the total of 1 year from July to July, right? So on the calculator here, it comes at $2.87. That's the total dividend you would have earned from this stock in 1 year, right? Doesn't sound like a lot, but $2.87. And then I looked at the current price of the stock. So you see the price here being 1807, the price here being 22 and some change. So we look at the math and we say, okay, if I had invested in this stock last year and when it was $22 per share, divide the 287 would have earned in a year, I get 0.127. So that's about a 12.7 dividend yield. That's at this price point where I pay more for this stock. Right now, the stock in the last year has gone down. It's down to $18. So that's a better deal because when you look at the dividends, they still keep paying consistent dividends no matter what the flip in the world is going on. If you look back here during COVID, in 2020, all these other times, going all the way back to 2013, they paid a dividend every month. So no matter what happening in the world, we can have another war in Ukraine, we can have another pandemic, we can have COVID, we can have a political uprising, whatever's going on, guess what they keep doing? They keep paying me money every single month. So let me look at the kicker of what I think is the best part here, right? So we looked at the last year and the The last year and the last price point, the company was giving about 12.7 per year in dividends, right? If we look at the current price point at $18 and we do the same math with that 287, it comes to 15.9%. So anyone that's owned this stock thereabout for the last year, if you were to buy it now at a lower price point, you're actually earning the same income, but you paid less money. So you're buying income for less because now your yield is about 15.9% in the last year. That's easy for me because I'm like, hey, if I put more into this, I'm buying it at a lower price point and still going to get paid the same as people that paid more for it, except I'm paying less. So in the future, when the market corrects itself and does whatever it does, and the price point of stocks in the market begins to go back up, guess what? I'm still earning the same thing as other people that paid more, but guess what I did? I paid less. Just think about this in the big picture, people. This can just open your mind, expand it to some things. Hopefully it does. We'll see.